When we talk about retirement, there are many ways one can plan it. This can include stocks, dividend, bonds, or investment coupons that one receives on a regular basis. But having crypto as a retirement plan can be quite a huge risk depending on your age and risk tolerance. Just a couple days back, I was helping my grandmother with some finances, and with her large retirement sum, she could very well get good gains in the market. But at her age, this might not be the best option for her because as we grow older in life, we tend to take on less risk and would prefer to go for stable returns. But since we are very much into crypto, there must be some way we can reduce our risk but still get regular payments that can build and contribute to our retirement. And in today's video, we're going to talk about that. Hi, my name is Jordan and welcome to the channel. So when I first started my channel, it was mainly traveling because I was based out of New Zealand, and at that point of time, traveling was kind of the in thing and people visiting different countries, etc. But that was what sparked me to really start thinking about investing for my future, my retirement, and my own family. Because moving forward, things will only get more and more expensive.
Super expensive.
And in the past couple of years with COVID, we have seen how things have affected many, and now we are slowly moving out of it and things are starting to get more expensive due to a thing called inflation. And because of this, I started investing into different things like stocks and crypto. And we all know that these two investment vehicles are very different because they all hold their own risk and rewards ratio. And crypto probably gives the highest risk but also gives you the most reward. But one of the hardest things to do with crypto is taking profit because we don't know when the peaks are, and chances are you have probably experienced the I should have sold disease. So I too suffer from it, and it sucks big time, like really big time.
This sucks.
So taking profit in crypto poses a few challenges for me personally. The first problem is what to do with the money. So for example, let's say we took a profit from a trade, and there are a few things that we can do here. We can either put it into an earn account to generate interest while we're waiting for the next dip, if it ever comes, or we can take on some risk and put that money into another token, hoping to fold our money again. But this might cause us to end up losing some funds, or worse still, lose everything that we have generated or earned so far. Or maybe we can cash it out to purchase traditional assets like gold, silver, or even stocks, which can slowly contribute to our retirement fund if you are building a portfolio of stocks that can give you a regular dividend payment. But just to be clear, there is no right or wrong with these options because it's really up to personal preference at this point. But if we look at it from different points of view, each of these ways will bring us some benefit. If we are willing to risk our profits for more profits, that can help us grow our wealth much faster. And by putting your profits into an earn account to accrue interest will also benefit yourself because you have more firepower to purchase more tokens in the future. And cashing out to buy stocks will build your retirement fund for you, and if you do like taking profit regularly and invest into stock diligently over a long enough period of time, let's say 5 to 10 years, you'll probably get a large sum of money for retirement. But cashing out crypto can be tricky, which is why we need to talk our sponsor for this video, HabitTrade. HabitTrade is the first crypto-friendly global stock investment platform that allows you to trade stocks available on Nasdaq and the Hong Kong Exchange. So one of the key benefits with HabitTrade is the ability to transfer stable coins like USDT directly into HabitTrade platform and purchase your favorite stocks on the Nasdaq or the Hong Kong Exchange. The HabitTrade app has a great interface which makes it really easy for people who are looking to diversify their crypto portfolio into stocks which hold less risk as compared to crypto. So HabitTrade also has a news tab that gives you up-to-date news about the market and the latest price movement. They also have a trending page that shows you the latest trending stock in the market that you can look into as well. And by signing up with the link in the description down below, you get a free stock worth $5 when you make your first purchase of $300 worth of stocks. And if you purchase more than $1,000 worth of stock, you get a free stock that is worth up to $20. And on top of that, you get customized market intelligence to help you make informed trading decisions. But most importantly, always do your own research before investing any money into any investment instrument. So thank you HabitTrade for sponsoring today's video. So when we cash out our profits and put them into stocks, we are at a stage of preserving wealth, and by putting our assets into a safe investment vehicle that can still generate passive income, although it might be much smaller at 4 to 10% per annum, but it allows us to divest our risk. So something I like to do with profits is to put my profits into an ETF like VOO or SPHD. So VOO is an ETF that tracks the S&P 500, which is essentially the top 500 companies in the US. And think about it this way, by purchasing one ETF, you own a tiny little bit of the top 500 companies, which is a pretty good thing to have. And in the last 5 years, from 2017 to 2022, VOO has pretty much appreciated 90%, which is pretty amazing and averaging at about 10 to 15% a year. On top of that, VOO also pays a small dividend of 1.33%. And this means that for every one share of VOO that you hold, you'll receive $4 in dividend when the dividend date is here. So some of you might be wondering, why do I not just buy Tesla and let it roll throughout? So if you have been following this channel, you'll realize that I'm a very lazy person when it comes to earning money, because I want to use the least effort possible to earn the most amount of money. And when it comes to picking stocks, it might be very challenging because there are many different industries out there, and each of them is affected by news or when Elon says something, and all this will cause stock prices to move.
You're Elon Musk.
So having VOO allows me to put my mind at ease knowing that I do own a small share of the top 500 companies in the US. So my next favorite ETF is SPHD. So SPHD tracks the top 50 of the top 75 dividend paying stocks. And this might be confusing, but it holds companies that we all might have heard of. So in SPHD, there are 10 different sectors that include consumer goods, utilities, financials, healthcare, oil and gas, technology, consumer services, telecoms, basic material, and industrials. And if you look at all the companies that are within SPHD, these are companies like Verizon, Philip Morris, Pfizer, Gillette Sciences, AT&T, Aviv, and much more. So being a dividend ETF, SPHD pays out a monthly dividend with an annual yield of 3.3%. So this doesn't sound like a lot, but at less than $50 per ETF, we are getting roughly 13 cents a month, which is pretty decent. And if we scale this up to, let's say, 100 shares, which will roughly be $5,000, it will be paying us $13 every single month in cold hard cash, which we can subsequently reinvest into more of the ETF to compound our money. But having said that, there is no right or wrong when it comes to investing, because everyone is different, circumstances are different, and financial situations are very different as well. So if my grandma were to use her retirement fund for stocks, chances are it might not be the best because of her age. But if you are somewhere within 20 to 30 years old, it might be a good time to start investing and start building your retirement fund, so you're able to do things that you really enjoy and still get passive income coming in every month or every quarter. So at the end of the day, do remember that everyone's financial journey is very different, and that is why it's called personal finance. And therefore, having knowledge of potential instruments and opportunities out there will be a bonus for you to give some thought to it and to see if these instruments will actually fit your lifestyle. So thank you guys so much for watching. Don't forget to check out Habit Trade to get your free stock when you start trading with them. So do drop a like on this video if you haven't, subscribe, and I'll see you in the next video.